Well, the WisdomTree Alternative Income Fund, HYIN, it seeks to track before fees and expenses the Gapstow Liquid Alternative Credit Index. It was launched in 2021 as the first ETF with diversified exposure to alternative credit, and it grants income investors access to a traditionally closed private credit market, the ability to seek high income potential in a cost-efficient and liquid ETF structure. Now, the underlying index holds 30 listed investment companies, including business development companies known as BDCs, mortgage REITs, and closed-end funds. And each of these entities arrange for leverage in an attempt to further enhance both the expected income generation and total return of their underlying alternative credit portfolios. And because each of HYIN's underlying holdings is required to distribute at least 90% of its income, HYIN's monthly distributions present investors with an attractive and competitive source for high yield potential.
Credit is a very familiar concept. In the financial world, it's the provision of money from a lender to a borrower based on a contractual commitment to repay principal and interest. The primary risk, though, is that the borrower may be unwilling or unable to fulfill those obligations. We call this credit risk. Alternative credit refers to bonds and loans that carry a higher degree of credit risk. The investments are alternative because they're alternative to traditional lower risk credit investments, such as investment-grade bonds. For assuming this higher risk, alternative credit investments are expected to deliver both a higher yield and a higher total return. Gapstow differentiates three primary categories of alternative credit investments: broadly syndicated bonds and loans, which are originated by banks but sold to a larger group of investments; structured credit investments, which include investing in the riskier parts of securitized pools of loans or bonds; and private credit, which are loans that are originated by non-bank financial institutions and typically made to higher risk borrowers that perhaps can't get bank loans directly. So three types overall of alternative credit: syndicated credit, structured credit, and private credit. Three primary reasons: income, total return, and diversification. As I mentioned earlier, alternative credit investments are expected to carry a higher yield and total return than bank deposits, certainly, but also investment-grade bonds. And historically, alternative credit investments diversify away from both equity risk and interest rate risk.